meeting yesterday than I would have anticipated. We did a survey question on our webinar yesterday. When would we hit 60? And the consensus was not till April. I'm thinking we might hit it before the end of this session. Carole, your thoughts on the open in Asia today? Still up.
Good morning, Sean. Good morning, everyone. You took me by surprise because you already said you were going to start with the sunny sky of Texas. Well, look, I mean, there's definitely a lot of optimism these days. And yesterday, in particular, for me, it was not just about the OPEC declaration, but if you look at some milestones, the number of people vaccinated exceeded for the first time the number of people infected, at least the official data. And already we're being told that some vaccines are stopping the transmissions, not just stopping people from getting ill, but also stopping them from infecting other people. So there is really some serious fundamental ground for optimism, unlike what we saw last year. And I think this is what OPEC Plus has been looking at, because all along they said they wanted to see what will happen to the control of coronavirus. Of course, we're not there yet, but we're on the right track, and this justifies their action. No surprise. Actually, for me, it was rather a boring meeting after all the excitement that we got used to from OPEC Plus meetings over the last few months, but was quite expected, and they will revisit their decision in March. But in terms of the market drive oil prices, we're not surprised to see that push, but the big question always remains whether they will remain sustainable at these prices without triggering other reaction, including supplies coming from elsewhere. But of course, we're not going to see it immediately. Therefore, maybe I support the survey findings of yesterday.
Dr. Aldo Flores-Quiroga, former Deputy Secretary of Energy and Hydrocarbons at the Mexico Ministry of Energy, and now visiting professor at the LBJ School of Public Affairs in the University of Texas of Austin, one of my favorite towns. Dr. Aldo, mute off and tell me, is there optimism, is the glass half full sentiment spreading to Texas? Mute.
Can't you see the sun shining in Texas?
The sun is shining, reflecting. There's great things happening in Texas.
Exactly. You know what, let me echo what Carole said. It's 2021 will be grounds for a more optimistic outlook, given what the perspective is for the recuperation of demand. And that, of course, will help the oil industry in Texas. The one variable that is affecting, if you will, expectations, but not necessarily short-term, is the new policy of the new administration regarding the promotion of clean energies and renewables in particular, and the stop to leasing, the process of leasing for oil projects in federal lands. This does not mean a reduction of activity necessarily in Texas lands, but it does present some questions about the outlook for part of the industry. We don't expect a shift in what is already happening in the leases that have already been awarded, in the projects that are underway, and we do expect a recuperation of production as demand picks up. But there's this new variable in place. It's not the first time that it happens. And there's this fundamental shift in focus in terms of energy policy that will be promoting renewables. That said, Texas is a state that is also strong on renewable energy.
Well, it has a chance to win on both fronts, right? Clearly. Where is the appetite within the financial sector to continue to back a shale and extend the credit lines that it previously depended upon?
That's a question we're all asking. If you know, the conversation back in last semester, I mean, last half of the end of the second half of the year, semester, I know it's, now I'm thinking in college terms, right? But anyway, the second half of the year was that the appetite was not exactly high. Then again, there's an appetite in the planet still for oil and gas, and with these prices, then it can be much more sustainable. The way that we're seeing prices recuperating makes a lot of projects more profitable than they would otherwise be.
Well, $60 certainly would get a lot of shale producers, including the big players, Chevron, you think, coming back in, although they do seem to be holding off. Rustin Edwards, head of fuel oil procurement at Euronav, sitting in beautiful Geneva, where I would suspect the sun hasn't quite risen yet. So we do.
Well, the sun is rising over Geneva as we speak.
Okay, there we go. There we go. The Europeans are coming out of the dark ages. That's good. Rustin, do you share the optimism with your German cousin in the Black Forest, or are there issues still to be concerned about?
Well, I was busy sharpening my horns earlier this morning because I've said $60 price target is a fairly achievable goal, especially with the, as I like to say, the three pillars of 60, which were OPEC discipline, refinery margins, and dollar flow activity. So we see the money flow coming into the futures market, accelerated greatly going here into February, in the first 3 days of February, pushing the markets up $3.5, $4. We've got refinery margins that have been trending higher, refinery utilization rates trending up. So that means we are seeing some real demand come back in. Which tells me that we're going to see probably more pull from refineries to get crude in, which will keep demand supportive. I think we need to keep seeing the refinery margins ticking higher to sustain any rally, because the front month futures contract always has a tendency to outpace the reality of the actual demand flow.
Carole, there's clearly a macro picture to be optimistic about, and that's been the sentiment since the start of the year, if not earlier. But purely in the oil space, without the Saudi decision to cut 1 million barrels a day unilaterally as of starting on February 1st, it's very unlikely we would have seen this climb up towards $60 a barrel. How important then is it going forward that this is indeed maintained, or should we expect the demand recovery to come in and allow Saudi Arabia to also benefit?
The Saudis definitely take a lot of the credit behind the recent climb in prices. So they played the most important role, I would say, in putting such an upward pressure on prices, because mind you, before that, we saw prices quite comfortable around $45 a barrel. And then they gained, an extra $10, $15 a barrel as soon as the Saudis took this extra step. In addition to that, yes, when we talk about OPEC Plus as a group of producers, we say that the compliance is great, but when you look at it on an individual basis, you see that it remains uneven. And still some countries are not meeting or delivering on their promises. And despite their continuous promises, actually, I was looking at some statements made from June, July last year. The usual suspects continue to promise and promise and promise, and they don't deliver. Perhaps the only exception was Nigeria recently, but it wasn't because of its own voluntary will. They had an accident at one of their facilities, and that kind of cut down their production. So we shouldn't expect much from the other members of OPEC Plus, the laggards, which have not delivered to improve their compliance tremendously, maybe a little bit. But at the end, for me, OPEC Plus remains all about Saudi Arabia primarily. That said, they are receiving support from the global economy. We're seeing strong rebound in the Chinese economy. Anyway, the Chinese wasn't doing bad at all compared to other countries and major economies last year. Also this year, the outlook for other economies is on the positive side. We see a strong rebound everywhere, particularly in the US, maybe less so in the EU area. And even recent data from the US, not quite official, but we're going to see more and more of this data coming perhaps by the end of this week, that employment figures are improving, payments are improving, activity level is improving. So in addition to the Saudi move, we're seeing support given from the demand side, oil demand, the drawdown on inventories. I mean, I didn't expect that to happen, that OPEC Plus has been tremendously successful, not in terms of pushing prices up, but actually a more direct reason, which is drawing down on inventories built, which reached record levels during the crisis. So all in all, I think that it's Saudi Arabia, it is oil demand, inventories, and macro outlook, which are reinforcing each other for the short term.
Dr. Aldo, on that point, we are coming up to the first year anniversary. It seems only like yesterday that Russia and Saudi Arabia had a big spat in Vienna on March 8, I think it was, or something like that. Then this big agreement was put together the following month. We will be coming to early March again with Saudi carrying the heaviest load. I'm wondering, your own thoughts to the sort of the outlook for that consensus holding, if indeed Saudi Arabia is expected to carry the heaviest bucket.
Well, let's put it this way: will be hardly the case that we'll be out of the woods in the next 2 months. So the need for an ongoing engagement will be there. And so far, that engagement, despite its complications, has proven useful, both for Saudi Arabia and Russia and the rest of the participants, despite the challenges in terms of fulfilling the commitments and adjusting to what is a very volatile situation. At least it was for during the last year. We have yet to see what's going to happen this year. It seems that things will be stabilizing, given the arrival of the vaccines. But I think it would be rumors of a death of cooperation and collaboration would be premature.
Maybe not death, but nonetheless, Saudi is carrying a very significant extra weight here on behalf of the whole market. And a year ago, they were willing to blow up the whole deal because they weren't willing to do that. So time hasn't changed that much. I mean, obviously, these things all float in the one space, but it would appear to me that that may create some tension if indeed others don't step forward in the next month when they meet in early March.
It's true. Then again, the flexibility the countries face is quite different. The decisions in Russia respond to a more diverse set of factors, I would say, than in some of the oil countries that have national oil companies or that have a set of rules that make decision making easier. So that will be part of the challenge. But you know what? I have participated in some of these meetings and have observed them as well, and they are hardly easy. It's not the case that it's just a walk in the park every time there's this meeting. There's this push and pull, and so for me, just a normal part of doing business.
Well, as Carole pointed out, inevitably Saudi is well placed to gain from this supply cut, because at 10 or 8, 9 million barrels a day, of course, they gathered that extra $10 a barrel or whatever it ends up being on the upside. So there's not a total net loss, clearly. Rustin, looking out to Asia, looking to the demand on tankers and shipping rates, etc., what sort of picture can we take from that at this point?
Well, the picture on tanker demand is fairly bleak at the moment, with the OPEC supply cuts still holding firm. There's just more ships than there is cargoes of oil to ship. Some of the concern I see going forward is with some of the new policies that Biden could administer going forward on shale production and U.S. crude production. Will the export levels hold at 3 million barrels a day, or will those drop? We've seen the production levels steady here at 10.9 to 11 million barrels a day. 1/4 of that's getting exported out on a daily basis. So hopefully those maintain. That keeps at least some of the long haul freight in check. But as refinery runs are going up, that's the bright spot, because refineries are the end users of the crude, and the more refineries that come back into full runs, the more demand there is for the transportation of the crude to the refinery.
And also the continuous drawdown of inventories, which seems to be increasingly becoming an underpinning of this price rise.
Yes, I mean that is the OPEC has been very successful. I mean, I think they put out the stat 2.1 billion barrels of inventory have been drawn down since April of last year. So that's a significant chunk of stock stock draws in China, stock draws in the United States, stock draws in Singapore. So all your major pricing hubs are all seeing the same impact. And eventually, I think as we go into the March meeting for OPEC, I think there will be a very difficult time to keep the group's cohesion because at $60 Brent, everybody wants to produce. We are back to the same price levels that we had pre-pandemic. So at some point, they need to start reopening the spigots. Otherwise, there will be a tremendous price shock higher, in my opinion.
And I suppose the OPEC Plus, Carole, does risk allowing others to come back into the market and take those barrels that they're currently keeping away. It is a delicate balance how to navigate that, and clearly the demand recovery is the key question, at least that Saudi Arabia will be watching. Within Europe, it still looks like quite a stressed situation.
Well, it is, as you can see from my hair, I'm under lots of stress, but really,
I don't quite see the gray yet.
Well, it's good. It's all the lighting trick.
You've got a good production crew there.
Yeah,
German production crew. They're
exactly
quite
precision.
good technically, exactly.
No, look, definitely here you can feel the stressful situation. But again, we're looking at the next few weeks. We have to keep also looking at the longer term. And when you look at the longer term, there is greater optimism, greater confidence. Even factories for the production of vaccines, you see, and the supply of vaccines, everybody's keeping busy, I would say. And even with lockdown, yesterday I managed to go to a curtain shop, which is officially closed, but you give them a call and they open for you to visit. So it's not as gloomy as the media portrays. Of course, it's not rosy, but I'm much more optimistic than I was, let's say, a few months ago. As to go back onto your question on OPEC Plus, one point to highlight about Saudi Arabia's strategy, mind you, even though that they did this price war last year, they know they cannot afford it today, but also historically, Saudi Arabia played a very important role in the longevity of the group of OPEC and maybe today of OPEC Plus. And I don't think they're going to turn their back on this group. So they have traditionally subsidized cheating members and they accept the situation to achieve a certain price level. They talk about stability of prices. I don't buy that argument. They talk about reducing volatility. I don't buy that argument. I think they have a certain price target to achieve, and that's what they are after. And when they achieve that, they may relax a little bit and gradually, but also it depends on the reinforcing factors in the economy. But there is also the other side of the story, which is, as we said earlier, and Aldo mentioned it, and Rustin as well, the coming back of shale. We're talking about maybe increasing in oil prices temporary, but again, the question is, will it be sustained for a longer period without triggering reaction from elsewhere, from other producers, particularly US shale producers? So that's something I would keep a very close eye on, despite the overwhelming pessimistic view about the outlook for shale. It continued to surprise us primarily on the upside.
Dr. Aldo, while we have you on the show, I wanted to get an update from where things stand in Mexico and South America in general in terms of the recovering oil price. And given Biden's policies towards curtailing production of hydrocarbons in the US, does that create an opportunity for the Mexican side of the Gulf to take up some investment? Generally, an update on Mexico and South America would be great.
Well, let me begin with a broad picture. With Mexico and Venezuela following a different path from the rest of the region. Well, Venezuela, we know it has been a much more dire situation. In Mexico, we are seeing also a suspension of the leasing program and an ongoing fall in production. Production in Mexico is below what the government expected and but close to what most people are seeing, and it's not stabilizing clearly. We are seeing, on the other hand, promising activity in Brazil, in Colombia, with also greater investments, promotion for natural gas in Argentina, and of course now the success in Suriname and Guyana and what might be happening in Suriname. So there will be an impact from the region in global oil markets. But Mexico has now chosen a path that is not welcoming for private investment. So the projects that are already underway are happening. And in fact, the Mexican side of the Gulf of Mexico is where most investment is happening in the Americas for oil exploration. And that will lead to, I think, very attractive and interesting projects for the oil industry. But that's it. There's no more activity beyond that. And Pemex is having a very difficult time stabilizing production, and even the idea of increasing it, well, it's a commitment of every government in Mexico since 2004. It has been a very difficult promise to upkeep. So summing up, South America will be participating more fully in the opportunities of the global oil market. Mexico and Venezuela, not necessarily.
And given, I mean, it is such a significant amount of potential supply from both countries, as well as Iran and others, it's amazing to think the amount of supply that is currently not making its way to the market. Let's go to the survey question for today, which sort of touches on this Saudi position. Saudi Arabia will need to maintain a unilateral oil supply cut of 1 million barrels per day, MBPS, not S, but day, in Q2 to establish $55 a barrel as a floor rather than a ceiling. That ultimately Saudi will need to continue with this cut if price is its target, as Carole has pointed out, then this cut will need to be maintained through the second quarter. Yes or no, agree or disagree essentially with that statement? Rustin, the other key ingredient that has been underpinning the market and for some time, but each moment is another momentum, and that is the great freebie stimulus in the US, which is sort of crawling its way to the door, as it has in the past. Each time it seems to be a very difficult baby to give birth to. But your own sense of how important it is on this occasion, is the market really waiting for it, or is it more of a Main Street than an oil markets issue?
Well, I think the markets are probably pricing in there's going to be some type of stimulus. That's why we're getting the boost we're seeing in fund flow. The dollar has made a massive move higher over the last 2 weeks. I mean, it's amazing how strong it's become when you're talking about another 1.9 potential trillion stimulus coming into the marketplace. I think the market is already pricing in that there will be some type of stimulus. How big it is, that's always going to come down to the compromise in the committee meetings that happen behind closed doors. I I don't think the Democrats can push through a 1.9 trillion. Can they get a 1.1, 1.2? Probably. So I don't think the Republicans' 600 billion stimulus is enough to really achieve any of the goals that they say they need to achieve in stabilizing those in unemployment and helping small businesses turn around and come back to life.
And Rustin, anything else that you'll be watching for the rest of this week that might guide the markets as it closes on Friday?
It's a very tough one.
Yeah.
I mean, I don't see any real hot spots geopolitically here at the moment. I mean, there's been a little bit of the sideways whispers of Iran and the U.S. Will they not have some type of meeting in the coming couple of months to see about rejoining the JCPOA? Which I think that is the one piece of real headline news that could drive the markets lower. So I think if there is some type of meeting of the minds there, that's going to be the biggest negative impact I could see happening to the market. Otherwise, I think $60-61 Brent is in our near future.
It certainly feels that way, Carole, that the momentum, if left to neutral, so to speak, obviously little sentiments about OPEC and so forth, but ultimately the sentiment seems to be to rise rather than in previous weeks or times we would have had a sort of momentum to fall off the price when there isn't any real direction to the market. On this occasion, it feels like the sort of neutral position is to keep moving up.
Yeah, and as I said in the chat room, it's very difficult to concentrate on discussion and chatting, but I said that we have to keep the time frame in perspective. Which time frame are we talking about? So at the moment, as we speak, there is this kind of boost. There's a sentiment about the market direction, OPEC plus, is still going, demand numbers are still improving, vaccine news are improving. But when you look beyond that, let's say towards half of the year or the end of the year, you start seeing that the risk, maybe different kind of risk are emerging. Structural damages to the economy may actually create some lasting problems that will come back with a vengeance in the coming years. Shale, we talked about shale. Rustin mentioned the all-important Iran. There are big question marks about what will happen with the Iranian deal. So at the moment, I would say, yes, this kind of positive sentiment will improve. Even if Biden doesn't get his stimulus package, the full package approved, there's already some support for the economy. At the end, when he announced that package, the economic conditions were much worse than where we are today. So even if the package that gets approved or a much smaller package gets approved, there's also a boost for the economy. But going forward, I still caution against some risk, which can put not necessarily a strong downward pressure on prices, but may let them stall around, let's say, $55 to $60 a barrel.
Let's get the results survey before giving Dr. Aldo the last word today and see. Yes is the answer. Saudi Arabia will need to continue its unilateral cut to establish 55 as the floor. Dr. Aldo, your thoughts on that point, the sort of politics in the US. Does Biden find agreement with the Republicans as and of itself a kind of a very positive signal for the rest of the year, or do the Democrats go alone to get this stimulus through? Generally, where do you see the politics on that?
It's hard to tell. We saw a power sharing agreement today in the Senate. That, in principle, should be a harbinger of some civilized form of cooperation, but it is the case that we're seeing very extremes in the package that has been presented. So now we know that it's not going to be either of the two proposals. It's going to be somewhere in between. What that means for the pace of recovery is still unclear. I think the recovery will depend much more on the outlook for what vaccines are accomplishing in the US and in the rest of the world, certainly in Asia. And so we have yet to observe more details about how that will be working on. And I'll just say there are things that I'm wondering about the survey question, because it implies that, the results, the majority results would imply that we don't see a strong growth of demand, or that we need a stronger drawdown of inventories in order for things to justify this type of on continued policy. Anyway, it's a good question.
Well, I think it ultimately is the question. There's general consensus that the 6 million barrel a day demand recovery of 21, which is continuously down, revised downward by the IEA again this week, down to 5.5 now. But when does that actually kick in is the key, and when do people get on airplanes and all of that type of stuff. But before I let you go, Dr. Aldo, it wouldn't be cricket, as they say in Britain. Big story next week with Donald Trump coming back to the headlines with the trial. Is that indeed, does it feel sitting in Texas as a big story, or is America building up for some big drum roll, or is it yesterday's news wrapped in fish and chips?
I think it has to be a big story. It's a very uncommon situation, to say the least, and I think it will be drawing a lot of attention. I don't think that it will be the type of news that will be affecting the course of economic recovery and the like, but it is something that might have the potential of emphasizing again the divisions that we have witnessed among these political camps in the US. So yeah, it's a worthwhile moment for political observation in the U.S.
Well, I suppose it has the potential of stirring up the pot, as we saw 4 weeks ago in the storm on the Capitol building, and was sober reminder yesterday of the police officer who was killed, who lay in rest in the Capitol building, that potential it still is out there, and how it will manifest itself over the coming weeks and months. Next week could be a moment in which waters can boil, perhaps. But anyway, that's the end of the Middle East week. We will be watching more and more vaccinations, hopefully, everywhere, and the benefits of that for everybody individually as well as collectively. But thank you, Rustin, Aldo, and Carole, for your time and insights today, and for everybody else joining us on the call today and this week. Have a great weekend. Have a safe one, and we'll catch everybody back here on Sunday with Christoph Ruhl and Mike Muller giving us their week in review. Thank you very much.
Thank you.
Thank you all very much. Stay safe.
Bye-bye.